What's going on, everyone? In this video I want to show you guys an easy strategy where you guys can trade price action on the NQ futures using just a few very simple indicators and kind of guidelines, right? So before we even get started, make sure you guys are familiar with risk management, how much drawdown you actually have on whichever prop firm that you're trading for, what's actually healthy. Create a daily loss limit, something where if you take 1-2 losing trades and lose X amount of dollars, you're going to stop trading on the day. First things first, without discipline and without controlling your emotions, you're not going to go too far regardless of strategy. So with that being said, I want to kind of highlight exactly a few things that are on my chart. So some of those things that are on my chart are going to be the 20 SMA, which is the white line that you see on my screen. Also VWAP, okay, which is the green line. And then this black box, I always mark out, it's the initial balance. So it's the first hour of trade, that range, okay? So that's going to come in. It's going to go hand in hand with using this VWAP strategy and kind of maximizing more setups. So if you notice today's price action, today is July the 15th. Now, it was a little choppy off the open. Okay, so one thing that I want to make very clear, and one thing that I've been doing for myself as of late, is to not trade the first 30 minutes of the market. Okay. Now, we are getting some setups in the first 30 minutes of the market. Some of those setups are paying, some of those setups are not. For me right now, it's just working out kind of, not taking those trades. But if you can't bring yourself to sit out for 30 minutes, at least do me this favor. Do not take any trade setups the first 15 minutes, okay? Especially if you're new. Give yourself the time to learn this business the right way. So, by learning it the right way is not by jumping into everything, as soon as the bell rings. I know. As a new trader, as someone who maybe just signed up for their first evaluation, or hell, maybe you're on your 25th funded account after losing accounts time and time again. As soon as the bell rings, you want to make money. Okay, I get it. But limit yourself, control yourself. Okay, the market is not going to go anywhere. We've got a lot of opportunity to make money in the market, so forth and so forth. So the first thing that we're going to focus on here is the first 5-minute candle. Okay, the first 5-minute candle here is a little candle. It's got a little green arrow on it. Again, before anyone even comments, what are the green and red arrows on my screen? It's nothing more than Thinkorswim. That's the platform that I use to do all my charting. Now, again, I trade on TraderVate with Top Step. I trade on TraderVate with Apex. I also trade on Top Step X. I do my charting, okay? My charting, because I trade options, I do my charting all on Thinkorswim, so I don't have to go look through a million different platforms. So with that being said, if I was to right click on the 20 simple moving average and I go to edit study, show breakout signals, yes. All it's telling me is that any time that price action closes over under the 20 estimate, that's it. Okay, it just draws my eyes to that candle. Moving on. If we look at where price action was trading in the pre-market, we were trading over VWAP. Okay, so here's where the market opens. We immediately shoot up, and then we shoot up a little higher, and then we shoot up a little higher, and then a drastic pullback. This is generally where a lot of traders tend to get trapped, because they get in off the open here, or maybe they're a little hesitant, or maybe they want to see some more candles. And then the next candle starts to push green, they get in, and then it spikes, and then they lose all their cash, right? So at least sit out the first 15 minutes. It's going to avoid a lot of chop. It's going to avoid a lot of confusion off the open. And quite frankly, it's just going to protect you. I mean, again, many of you guys out there who are trading on prop firms, you guys are trading with way too big a size for your account anyways. So if you take one bad trade where the market pulls against you 15-20 points, you're really going to get hurt, and it's going to cause a lot of emotion. So just, for one thing, size accordingly, and two, stay a little bit more patient. Now, if we look at this candle here, this is 10 minutes off the bell. We should still be sitting, right? We should still be sitting out of the market. It does close underneath the 20 SMA as well as the VWAP, and the next candle confirms it. Now, if you are patient and you're kind of waiting that 15-30 minutes of the market, you're not going to take this setup because you're still going to let this volatility play itself out. Now, if you're taking trades off the bell, maybe you took this one long, maybe you made some cash, maybe you got stopped out, maybe you look to take this short and then you got stopped out. So you potentially, depending on when you hit the trigger finger, you potentially could have, you could have lost one trade, you could have lost two trades. And when you really think about it, okay, when you really think about it, you need to kind of be a little bit more patient, because it's really going to serve you a lot better to see a little bit more price action develop. Okay, so when you're able to see price action develop, you're able to get a much cleaner picture. Okay, so the way that this strategy is going to work and the way you're going to use this VWAP indicator is, after the first 15 to 30 minutes of the market, you're going to see where is price trading. Are we trading over or underneath the VWAP? Okay, which is the green line. Now, if we're trading over the VWAP, what we want to do is we want to start to take together what is the opening range low. Okay, so the opening range that I always look at is the first 30 minutes of trade. I always look at that low, and then I correlate that with the first hour low, which is the initial balance. Okay, that's the black box that I manually drew on here. So again, I just look at the 30-minute candles, I take the first two, and then I mark out that zone. Nothing special. If we're trading over the VWAP, well, I'm not looking to go short. Okay, if we're trading over the 20 SMA, I'm double not looking to go short. What I'm looking for is to go long, and where I want to go long is definitely going to be somewhere close to the breakout. Okay, so if you notice here at 7 a.m. Pacific Standard Time, we were pulled back into these double supports of the 20 and the VWAP, and then we started to push higher. When we took out this opening range here and we got above this upper VWAP band, this is when price action started to consolidate and then really started to rip. So I want to make sure that I'm trading size where I'm going to be able to withstand a potential loss below the VWAP. Okay, so if I look at this candle, this is a 44-point range candle. It's a very, very significant range here on this candle. It's when it's all said and done, we're looking at 50 points down here to the VWAP. Very, very hard to scalp one or two minis on that, or even trade one or two minis if you're going to really let this play out, because it's a little bit more risk than you're going to want to assume. So you might want to stick to the micro side. I would definitely recommend between 3 and 5 micros. That's going to give you enough kind of skin in the game to hold these trades and make some really good cash. Now, what I would look for here is, as long as we're trading over the 20 and the VWAP, I'm going to look at the opening range here. Okay, so I'm going to look at what is the opening range, the opening 30-minute range. What is that level? Once I see what that level is, I'm going to put a price level line there. Okay. Now, after the first 30 minutes of the market has been open, I want to see that initial opening 30-minute range get broken, and then I want to take the following candle that confirms it. Okay, that's your setup. I want to make sure I'm going long because we're over the 20 and the VWAP. We'll keep it very simple. My stop loss is going to be a previous 5-minute candle low. Okay, so if I'm going to enter on this candle, right, I'm going to enter on this candle, I'm going to give it the previous candle low and or a close below the 20 or the VWAP. Now that's going to depend on how much risk you want to assume. Now again, remember, if you're going to sit there and you're going to trade mini contracts, this might not work for you, because if you do get into a drawdown, you might be in 15, 20, 25 points worth of drawdown. You might panic, you might freeze, you might sell, and then the position goes in your favor. So before you even think about taking a trade, you need to think about how much you're willing to risk. Okay, and I don't think about risk in terms of dollar amount. Okay, so when I think about, if I want to risk, let's say $250, well, I'm not going to take 2 mini contracts and risk $250. No, that's stupid. It's absolutely stupid. And that's what a lot of people do, is because they'll tell themselves, well, I want to risk $200, I want to risk $300 on this trade, and they'll take 1 or 2 mini contracts. It pulls back 5, 6, 7, 8, 9 points. Next thing you know, you get stopped out and the move still goes in your favor. We need to use technical stop losses. What is a technical stop loss? A previous 5-minute candle low, the 20 SMA, the VWAP, the opening range low, the initial balance low. We need to use technical levels of stop losses. Now, how do we make those technical levels of stop losses fit into that $200 or $300 we're willing to risk? With size. We can't do it with minis, but we can do it with micros. Even if we're trading, giving ourselves 50 points worth of risk, right? You're willing to let this wiggle around 50 points to make 50 points, let's say, for example. Well, if you trade one micro contract, you're going to be down $100 if you do lose. If you trade two, you're going to be down $200. So maybe we can trade 2 micro contracts. And in return, we're looking to make somewhere close to at least 50 points on this potential move, as long as we're trading over the over the 20 and the VWAP. Makes sense? So on this particular move, it's a 44-point range candle. We're over the 20, we're over the VWAP. We're going to take 2 micro contracts here on this confirmation, and we're just going to sit. We're over our 20, we're over our VWAP. We're above our reason why. We're just going to sit in the trade. We're not going to get squeamish when it goes down. We're not going to panic when we're in drawdown, because we've got technical reasons that are holding and acting as support. Now, when this starts to move in your favor, what you can do is, as it starts to approach that 1-to-1 of 44, 45, 50 points, if you want to squeeze and maximize your profits, you can sell 1 contract. That's going to be a $100 winner. And then you can hold that running contract for an additional 10 or 15 or 20 or hell, even 100 points if the market continues to trade up in your favor. Now, in this particular situation, if you were to hold that 1 micro contract, well, then you would have been stopped out here, and it would have, essentially been right around where you were selling out your first contract. So break even on the second. I'd hope that we don't let it pull back this much against us. There was reasons here, like on this indecision candle, that was letting us know that this move was getting exhausted and tired. And then especially on this candle close here, this move was telling us that this move was ready to go down. So again, make sure that you're being smart, right? A good trader is going to use their own intuition as well. So if we notice when we close below VWAP here, this candle that closes below VWAP was a 31-point candle that closed below VWAP. Now it doesn't give you 31 points. So how are we going to navigate this situation? How are we going to navigate this potential problem? Okay, because this is going to be a potential problem that you're going to face a lot in your trading, is that when you get a setup like this that closes below VWAP, and then it confirms, you can see the low price here is 20,648, and it goes to a low price of 20,603. So actually, does it give us 38 points? It might give us 38 points from 48 to 03. Guys, this actually gave us around 40 points, around 35 points from I got to pull up the calculator. I really got to pull up the calculator here. My math is not that good. So if we were to look at the candle that closes below, candle that closes below VWAP was 206.32. So 206.32 minus, and then we look at the low of this candle, 206.03. I was looking at the wrong candle. 206.03. It's a 29-point drop. So in this particular scenario, you would have not taken the range of this candle, which was 31 points. You would have missed it by about 2 points, okay? Now, it does bounce, and it does put you into drawdown, and it trickles around VWAP. You could actually try to hold this trade, and it would have hit for a profit of 1-to-1 here, but you would have had to have been a little bit of a dynamic trader and used a 20 SMA as a stop. So, all in all, this trade could have stopped someone out on a short position. I could also see how someone scalped 15, 20 points on this short position. But you can see how it gives you a little bit of a setup. Now, the very, very difficult thing to do is, because you're going to run into a lot of trades like these, right? I run into them all the time where the trade setup's there, it confirms, and it misses target by a few points. Another thing that you can do that's helped me in the past, and again, it all depends on what day of the week it is, right? Because the market likes to do things erratically. So one thing that's kind of helped me out here is if the range of this candle is 31 points, I'll cut the range in half and I'll say I'll look for a 15-point take profit. If the range here on this candle that breaks the opening 30-minute opening range here is 44 points, I'll look for 22 points. It's helped. In that particular scenario, if you were to do half the range, you'd have taken 20 points here and you would have taken about 15 points here. So all in all, about 35 points out of the market. Trading 2 micro contracts even, you're looking at $60 winner, right? Around a $60 winner per contract. You should be up around $120, $125. And that's not bad considering the market's only been open a couple of hours here. And again, it's only 2 trades. They're pretty relatively stress-free trades. They did work. But again, everything looks perfect in hindsight, right? So that's why I'm trying to give you these different types of scenarios. And you have to be open-minded to different types of scenarios because not every trade's going to work like this. Not every trade's going to work like this. Because again, for every trade where there's a certain trader who's taking 5 points to take profit or 10 points or half the range and taking 15 points to take profit, there's a trader looking at this trade and saying, well, I want to get 1-to-1 or I want to get maybe 2-to-1 and I'm looking for 50 points, 60 points, you know? The next thing you know, you get stopped out when it closes back over VWAP. That's why I kind of like to use this trailing 20 SMA, because in this particular situation, this 20 SMA would have got you out of this trade on a runner a little bit quicker than letting it come all the way down here to VWAP and test, right? And then eventually closing below VWAP and breaking even on this whole trade, right? But again, like I don't see a trader who's going to hold it this much and then let it come back this much. If you are, we've got a problem. But again, you know, I have to go over every scenario because, you know, scenarios are different. Again, if you're looking at the VWAP and you take this setup through the VWAP that closes below, maybe you can tell yourself, as long as we're trading below the 20, I'll hold this position, right? I'll hold this position as long as we don't close back over the 20. And essentially, if you do that, you would have made money. You would have made 30 points. You could have made, you know, close to 40, 50 points, right? But the only thing that's going to allow you to do that is trading size. That is adequate for your account size. You're not going to be able to go in there and bang off 2 or 3 mini contracts on these type of moves. If you want to go in there and bang off 2, 3, 4, 5 mini contracts, you better be a little bit more of a scalper and looking for those quick hitter take profits between 3 and 7 points, 3 and 10 points. Again, if you call yourself a scalper and you tell me that you can scalp 20, 30 points at a time, my hat goes off to you, because that's extremely hard to do at a high win rate percentage that's going to allow you to be profitable for a long time. And I've done this for a long time. You might do it once, you might do it twice, you might do it for a week, but it's very hard to stay consistent doing that. That's why when I take my scalping setups, I look for 5 points. I get in on the setup, I take 5 points, I get the heck out. But I'm trying to show you different ways where you can trade here, where you can maybe open up that stop loss a little bit and expand that take profit. Right? Because sometimes, you know, you don't want to sit there and try to scalp for 5 points here and 10 points there. You want to maybe catch a bigger move, right? So if you want to catch a bigger move, you really got to use these other areas of confluence to kind of allow it to give you a little bit more trust in holding these positions, right? Holding these positions. Now, again, in Evolution Traders and even on YouTube, you guys know that we've got the 20 SMA setup that would have put you into the trade here. This was a 51-point range here. You would have cashed on that 51-point range here, even if you took the whole range, right? You would have definitely cashed on the 5-point scalp, but you could have actually cashed on a 51-point move here, right? There's a 20 SMA setup here at 6:45 in the morning. This is 15 minutes after the market before you get in. It's 20 minutes after the market opens, so this might be safe to take. And this range here is 58 points. You could have essentially cashed out 100 points. So I'm throwing you guys different scenarios on ways that you can trade. The main thing I want you, the big takeaway from this video is if we're trading over the 20 and the VWAP, we need to be looking long. We can't be trying to call tops, okay? Now, this one here, maybe I could see how we call tops, because to be honest, I was on a call with the room and Evolution Traders, and we called this top. We got this big stop here. We didn't take it all the way down, but we got a good chunk of this candle. Okay, so it's a little bit of a different strategy. We get more in depth in Evolution Traders, but essentially once we're under the 20 SMA and we have room to the VWAP, well, essentially we want to be short, you know, a little bit more short bias. And once we get under both the 20 and the VWAP, we definitely want to be more short bias. and we can use that running trailing 20 SMA to kind of act as our guide. But once we get back over the 20 SMA, all bets are off to the short side. You feel what I'm saying? So markets are going to shift on a day in, day out basis. Now that's looking at the 5-minute time frame. You could look at something like the hourly chart. So if we look at the hourly chart, it's going to be a little bit more of a different view here. But if you look at the hourly chart, now this first hour candle here was already trading over 20 and over VWAP. You should have just been long. Okay, so you should have been long at least for the first, or long bias, looking to hold long trades and buy bounces for the first 3 hours of the market, until we really started to pull back at 8 a.m. Pacific Standard Time. Once we close below VWAP, all bets are off to the long side. We have to be thinking short. So between 9 a.m. and 10 a.m., we needed to have been thinking short. So let's go between 9 a.m. and 10 a.m. So between 9 a.m. and 10 a.m. is here, right here. This is 9 a.m. and 10 a.m. is around here. So between here and here, we need to be thinking short, because that's when the hourly chart candle started to close below VWAP, and we don't want to be long anymore once the hourly chart is below VWAP. So you can also use that. So I hope this video opened up your eyes a little bit of different ways to approach and look at the market and analyze the market and set stop losses and set take profits. Again, there's no right or wrong way to trade. The best way to trade is to be comfortable with the risk that you're taking and confident in the setups that you're taking. And make sure you have a technical area to take profit and a technical area for a stop loss. That's the main thing. Again, there's a million different ways to trade supply and demand. You have to find one that suits you and that you can read and that you can execute on and that you can trust. If you like this video and you want more different educational videos like this, showing you guys how to set stop losses, set take profits, use different indicators for different types of strategies, make sure to comment below. Make sure to give me a thumbs up. Again, if I don't get 100 thumbs up on this video, I'm not going to make any more strategy building guides, okay? Because I put a lot of effort, my voice, my thought process, my chart time. I'm using this chart time here where I'm getting ready for tomorrow's session to throw out my ideas to maybe help you guys make some money and pass some challenges and get some payouts. Now, if I don't get 100 likes on the video, it's not really showing me that people are interested, and then it lets me know that, hey, I'm probably wasting my time making these types of content. So with that being said, if we get to 100 likes on this specific video, I'll continue to make other strategy building videos. I'll see all of you guys on the next one.